Welcome to Meet the Press Now. I'm Ryan Nobles. After another wild day on Wall Street, with less than 8 hours to go until the largest U.S. tariffs in 100-plus years take effect, with no clear exit strategy or endgame from the White House. Now, stocks opened the day with a big rally, fueled by hope that the worst of the tariffs could be avoided with the president's openness to negotiations. But that optimism faded, and stocks tumbled into the red, with the Dow falling for the fourth straight day, down roughly 300 points, after the White House confirmed that tariffs on Chinese imports would in fact skyrocket to 104% starting at midnight, and with Beijing saying it will, quote, fight to the end. At the White House today, Press Secretary Caroline Leavitt also confirming that every single one of those sweeping new tariffs on virtually every U.S. trading partner will go into effect tonight, and that the president's trade team was ready to begin talks.
The president met with his trade team this morning, and he directed them to have tailor-made trade deals with each and every country that calls up this administration to strike a deal. And listen, and each and every one of these trade deals should be tailored and unique based on that country's markets, based on that country's exports, the imports here in the United States of America. What makes the most sense for the American worker and for our industry?
Now, this all comes as the president's top representative on trade, Jamieson Greer, testified before Congress today, offering little clarity about a timeline for the talks.
Our large and persistent trade deficit has been over 30 years in the making, and it will not be resolved overnight, but all of this is in the right direction. So the president has indicated that he's willing to negotiate with parties that want to pursue reciprocal trade with the United States. We don't have any particular timeline set on that because, as you pointed out, Senator, the outcome is more important than setting something artificially for us. Senator, the president has been clear with me and with others that he does not intend to have exclusions and exemptions, especially given the nature of the action.
Meanwhile, a public drama of epic proportions is playing out between two top members of the president's inner circle over his trade agenda, with Doge chief Elon Musk calling the president's trade advisor Peter Navarro a, quote, moron who is, quote, dumber than a sack of bricks. That came in response to comments from Navarro blasting Musk for signaling doubt about the president's tariff policies. This was Caroline Leavitt's response.
Look, these are obviously two individuals who have very different views on trade and on tariffs. Boys will be boys, and we will let their public sparring continue.
All right, let's talk about all of this. Joining me now are CNBC senior markets correspondent Bob Pisani, NBC News White House correspondent Vaughn Hilliard, and NBC's Jesse Kirsch, who's been speaking with Floridians who are retired or nearing retirement about their economic concerns. So, Bob, let's start with you. The markets rallied to start the day. Things looked better for investors. Then it all went south pretty quickly. What happened?
Well, we did start up 4%, and the hope was that there might be some kind of endgame to these endless tariff wars that are going on. The countries had indicated that they were calling the White House, and the markets were hopeful that there was some kind of resolution down the road. Then, of course, we had the China defiance, and that was a major issue. And I think that was a major, major problem for the markets. You look like a stock like Apple down almost 6% again today. So that's a huge impact on the market. Apple is the biggest stock in the world right now. So Apple, of course, the iPhone is designed in California, but it's manufactured in China. So the bottom line is the stock market is trying to adjust its earnings expectations for the possibility that corporate America's earnings are going to be much lower if most of these tariffs are implemented. And we cannot figure out how serious or how likely the implementation of these tariffs are. Now that we have this deadline in front of us, it looks like it's actually going to be some real impact.
And obviously there's been so much volatility around the speculation that the actual tariffs would take effect. What could happen tomorrow if there are no deals done and they actually do take effect?
Remember, the stock market is a voting mechanism on a future stream of profits down the road, 6 months to a year. The profits for this year generally were considered to be pretty good. The U.S. economy going into this was strong. Job growth was a little slower overall, but the U.S. economy was quite strong, and earnings expectations were very high for this year. The market hit a historic high in the middle of February, just a month and a half ago. That's how strong expectations were. But if you have to layer on tariffs, Tariffs are inflationary. The market believes they are inflationary. The market believes they are a drag on earnings and a drag on the global economy. It's going to hold a whole rethink of the global economic system. That is not what the market is prepared for right now. So right now we are close to 20% drop in the S&P 500 from its high. We're not clear right now about whether that's fully accounting for the full impact of these tariffs. What makes everybody crazy, Ryan, is that all of this could change with a tweet. We're not talking about global economics here. We're talking about people who can decide what the tariff levels can be very, very quickly. And so the market mood may change tomorrow. That makes everybody a little bit crazy.
Yeah, and obviously there is some kind of, concern, questions from investors about whether or not these negotiations are actually going to take place, whether or not these tariffs stay in place. Look down the road for me a little bit. What if these negotiations start, but then no actual deals ever come to fruition and the tariffs are in place long term? How could that impact the markets?
That would be a long-term structural change to the global order. So globalism, no matter what you might think of it, made everything more efficient. It lowered prices. It generally lowered inflation because you had supply chains concentrated in certain areas around the world. People made semiconductors in certain areas. A lot of cheap, like clothing manufacturing, for example, might have gone somewhere else to other countries. And it made supply chains very efficiently. If you have to start building everything very close to the United States or in the United States, that means much higher costs. I'll give you an idea. A U.S. automobile worker makes about $70 an hour in the United States. In Mexico, makes about $6. In Canada, makes about $40. That's an enormous difference in prices, and that's one of the reasons that you have some of these differences in the costs of making these automobiles.
Okay, this is not a question that's going to be answered at least immediately. So, Bob, will stick with us and keep us updated as the markets continue to go up and down, waiting to see how President Trump's going to handle this. Let's go now to the White House, and that's where Vaughn Hilliard's standing by. And, Vaughn, President Trump keeps hinting that he'd like to negotiate on these tariffs. But do we have any indication that there are actually any real deals in the works yet?
His Treasury Secretary, Scott Bessent, suggested earlier today that the White House was engaged in conversations with Vietnamese and Japanese officials about a potential tariff deal or agreement. Of course, Israeli Prime Minister Bibi Netanyahu was at the White House yesterday and suggested that he would look to eliminate all trade barriers between the U.S. and Israel. Yet, in response, when President Trump was asked whether he would take off the 17% tariff he levied on Israel in return, he would not make that commitment. So it's not clear exactly what the president is willing to do in terms of eliminating the tariffs that he is now imposing, because at one point these were hearkened as, or being touted as being permanent tariffs. Yet what we have heard now over the last 24 hours, including this afternoon from Press Secretary Caroline Leavitt, is that the White House has opened ears and that 70 nations have reached out and that their message to other countries is to, quote, come with your best offer, according to Caroline Leavitt. But what type of concessions do they have to make? That's not quite clear. And how quickly could those deals be done? Well, that's going to be difficult too, Ryan, because if folks go back to the first Trump administration, the USMCA trade agreement with Mexico and Canada took nearly 2 years to negotiate, as acknowledged by U.S. Trade Representative Jamieson Greer, who was up on Capitol Hill today. In the Phase 1 trade agreement that was struck between China and the Trump administration back in 2019 and 2020, just that Phase 1 agreement took nearly 2 years to negotiate too. So there's a lot of serious questions still for the White House.
And there is some disagreement among President Trump's top advisors as to how this should play out. It's led to an ongoing dispute between Peter Navarro, who is perhaps the biggest cheerleader for tariffs in the White House, and, of course, Elon Musk, who's become one of Trump's most trusted aides. Walk us through how this whole thing started and where it stands now.
Right. Peter Navarro is his chief trade advisor and really has been the proponent of the most strictest tariff plan, and one that the president has really echoed repeatedly over the course of the last weeks and months. And he is somebody who, right, for instance, is really of the belief that these tariffs should be permanent and should be, in most cases, non-negotiable. And yet Elon Musk, over the course of the last several days on his social media account, has been public in suggesting that there should be 0-for-0 tariff agreement struck between the EU, the U.S., and other countries. A very different posture. And what have we heard in response? Well, Peter Navarro pushed back almost as a slight to Elon Musk, suggesting he's not a car manufacturer, but a car assembler, suggesting he's relying on foreign auto parts. And then in return this morning, we saw Elon Musk call Peter Navarro, quote, dumb as bricks, and, quote, a moron. So that is sort of the internal dialogue taking place. Caroline Levitt was asked about the two close advisors' public spat, and she said boys will be boys, and she encouraged them to debate the merits of tariffs for all the public to witness, Ryan.
And said that their open disagreements in public will continue, as a matter of fact. So, Vaughn Hilliard, thank you for that reporting from the White House. We appreciate it. Let's go out into the country and see how people are responding to this. That's where we find Jesse Kirsch. He is with a group of seniors. Jesse, how concerned are they about these looming tariffs and how it could affect their nest eggs that they're relying on for their retirement?
Yes, so Ryan, we've heard a mix of opinions from people, some taking the wait-and-see approach, right, sharing what we often think about with the stock market is look at it as a long-term play. Let's see how things look months from now. But there are also some people who are taking immediate action and altering their spending habits, including one gentleman I spoke with who says he's a retiree, lives down here in Florida, and is going to be changing some of what he does and some of the big purchases that he might be making based on what is happening right now with the stock market. Here's part of our conversation.
I had some money in the market. It's now depleted. It's probably half of what I had, all right? And it seems like it's going to get worse. You can't do this to the public. It's, you know, he's got to consult with Congress, and they got to do something about this. Just stop it.
And that gentleman was speaking to me about some of the things he'll be changing for the time being. He says he's not going to be going out to eat at restaurants. He had plans to buy a new car. He's not going to be doing that right now. So that's the real-time, right, trickle-down effect of people's reaction to what's going on in the stock market, Ryan.
And are they more worried about their investments, their stocks, or the potential inflation that could be caused by this pending trade war and how much they're going to have to spend on everyday goods?
Yeah, I think my conversation with that gentleman, again, really points to that question as well, Ryan. When I started talking to him about what's been going on, the tariffs, the stock market, the first thing he started talking about is that prices are still up. There's still an inflation issue. So I think that is still top of mind for some people, in addition, right, to these eye-popping headlines about what has been going on in the stock market over the last week or so. And one other thing that I thought was really interesting that stuck out to me from my conversation with that man is, you know, there's been a lot of talk not just about what is happening with the market in relation to these tariff policies, but also just the idea of whether or not tariffs are a good thing. And there's some people that shun the idea of tariffs broadly. That gentleman is an example of someone who says he doesn't think that what is happening right now, the way the tariff policy is being implemented, is the right approach, but he didn't have a problem with the idea of tariffs broadly, Ryan. So that'll be something that I'll be wanting to keep an eye on moving forward.
Okay, Jesse Kirsch, thank you so much for that. Let's talk now with Jared Bernstein, who is the former chair of the Council of Economic Advisors, and he's the former chief economist to then Vice President Joe Biden. Jared, before we get started here, I just want to play a little bit more from today's hearing with the current U.S. Trade Rep Greer. Take a listen.
Time matters. How long did it take to negotiate that agreement, the USMCA, that you were part of?
We did it at breakneck speed. We did in about 2 years.
2 years. And now you're telling us you have nearly 50 countries coming to you, approaching you to enter in a negotiation. And you think that you can do that overnight?
India.
Man, you're pretty superhuman here, if that's the case.
So, I mean, you've been in the room where these kind of negotiations are made. The White House has said that President Trump wants to negotiate what they're calling tailor-made trade deals with dozens of countries. Just from a logistical standpoint, how much time and manpower does that require? And is it something that you can do in a matter of weeks? Does it take months? Or could it take years, maybe even longer?
If I had to choose, I would say years. I think any one of these negotiations, at least historically, as you heard from the senator just there, can take many, many months. And again, it took 2 years for the USMCA trade deal that they were just talking about, and that was kind of breakneck speed. So I'm very concerned about the magnitude of what's going on and how long it would take to change it. But I'll say the following. The good part about this, or the part about this that I think is at least healthy for the markets, is if the markets catch a whiff that there's some wiggle room, that there's even the potential for some negotiation, they've shown quite clearly that things can improve. People need a message that at least the White House isn't so dug in that they're going to be impenetrable to any facts or any changes. In a way, I'm really talking about the difference between Navarro on one hand, or Navarro on one hand, and Bessent or Musk on the other hand. And, you know, when the markets think that Bessent is an ascension, they do better. And when they think that Navarro's taking over, they go south. So I really do think that's kind of what the debate boils down to.
You work for President Biden. He and President Trump actually shared the same goal of boosting manufacturing in the United States. President Biden wasn't necessarily opposed to tariffs. He used tariffs strategically to try and encourage manufacturing and to help the United States economy. Is this the best way of accomplishing that goal, kind of this broad tariff policy that Trump is trying to employ?
Far from it. And I think we're seeing opposition. I mean, the unpopularity of Trump's trade war is incredibly pervasive. Basically, if you're not paid to favor this strategy, you're pretty much against it. And that includes, as of yesterday, a bunch of billionaires who bet on Trump in the first place, like Bill Ackman and others. What we tried to do in the Biden administration was to incent investment in manufacturing through tax incentives. And construction of manufacturing factories, construction of factories actually doubled in real terms on our watch. Now, if you go back to Trump 1, you actually had a preview of what we're seeing now. The tariffs, which were a tiny version of what they're talking about now, that mini trade war was actually quite bad for the manufacturing sector. And there's a good reason for it. These tariffs make it a lot more expensive to produce here because American manufacturers import many of their inputs. Apple is an example you just talked about a minute ago. So a great way to make production more expensive and to hurt our manufacturers is to tax every single input they have coming in versus trying to incent greater investment in the sector.
And maybe expand on that a little bit, because I think that's part of where the disconnect here is. Because when President Trump talks about fixing the trade imbalance, in other words, making more stuff here so that Americans can buy stuff made by Americans, that's really a wholesale change to the world economy, right? I mean, it would mean building manufacturing plants that do exactly what you say, not just make iPhones, but make all the parts connected to iPhones. That's something that can't be done in even a 6-month period, right? I mean, how long would something like that take?
The kind of reindustrialization that they're talking about, which I happen to believe is just absolutely not going to happen, would take at least a decade. So that's point one. But point two is that you can't unscramble the globalization omelet. That's the way to think about this. These kinds of measures might have made sense 200 or 300 years ago when the world wasn't nearly as integrated as it is now. But at this point, because of the fact that 45% of our imports are inputs into domestic manufacturing, it just makes it much more expensive to produce here. And proof positive of this is that all the car makers, Stellantis, Ford, GM, they all went to the White House, said, can we get exemptions from the tariffs that are supposed to protect us? Alcoa, the aluminum producer, did the same thing. Can we get exemptions from these tariffs that you say are supposed to help us? Why do they want those exemptions? Because they import some of their inputs, a good chunk of their inputs. We actually have a North American auto production chain, not an American one. And so you're right. It just can't really be unwound without tremendous pain, and I think for little gain.
Okay. A lot of uncertainty. Not exactly sure what the end game is. Jared Bernstein, thank you so much for providing us with your insight. We appreciate it.
Thanks for watching. Stay updated about breaking news and top stories on the NBC News app or follow us on social media.